Welcome to the Investing Podcast presented by Tusk Media. The final bell has rung and the market is now closed. So let's move on to an audio and video recap with the Investing Happy Hour.
Cheers, everybody. Welcome back to the Investing Happy Hour, part of the Investing Podcast, presented as always by Tusk Media. Today is Monday, June 13th, 2016. We're really glad you're here. Hit that 5-star review. Show us that you love us. If you leave us a good comment, we're going to read it on the air. In fact, we're going to read some on a special episode that we have coming up later this evening. Make sure you hit subscribe so that you can get immediate access to an electric interview between myself and Matt Burton, the founder of Narwhal Capital Management, which is, of course, the parent company of Tusk Media. So I think you guys will enjoy that. Hit subscribe no matter how you're listening, iTunes, Spreaker, Stitcher, YouTube. Check us out. Be sure to be coming back for more. We will not be here in the morning for the morning market mimosa. We want to give everybody a chance to have an extra cup of coffee and really enjoy that interview. It's about an hour long in total, so I think you guys will enjoy it. As always, hit us back with feedback. You can email us here at theinvestingpodcast@gmail.com. Let's jump into the market. Woof. That's the word of the day. Woof. Not good. The Dow was down 73 basis points. The S&P was down 81 basis points. The NASDAQ was down almost a full percent. The global Dow was down 1.5%. Oil was down 79 basis points. The only thing up, as you might expect, was gold. Not a pretty day, and this is where I think it's important to come back to that balance between uncertainty and perspective. And we talked about that this morning, so let's get some perspective on this and try to identify the last time we saw U.S. equity markets this low. Now put on your thinking caps and your time traveling shoes, folks. Let's rewind way back, all the way back to May 25th of this year. That's right, folks. You only got to go back about 2 or 3 weeks to find a time when the S&P 500 closed at a level of around this. 2079 is where it closed today. It wasn't that long ago, folks. Yes, nobody likes losses. We saw losses Friday. We saw losses today. There's uncertainty hanging over the markets. But is this panic mode? Absolutely not. We're just kind of treading water a little bit, regressing some. So keep watching these stories as they develop. Look for that certainty as it starts to present itself and start to analyze that certainty for opportunities. And that's exactly what we're looking at on the winners front and the losers front today. The winner, LinkedIn. We talked about it at lunchtime, but Microsoft found a really great opportunity in which they were able to pay a 50% premium to acquire LinkedIn. I think you can tell we don't think this was the greatest deal in the history of mankind, but nonetheless made LinkedIn a big winner for the day, up 46%. Symantec was up about 5%. On the downside, let's talk a little bit about Valero and Marathon. Those are both oil-based companies. When oil's down, they're going to suffer. Both were down between 4 and 6%. So not a great day for some of those stocks. But that gets us to one of these themes of uncertainty that we've talked about a little bit, and that is the Brexit, the British exit from the European Union. So some quick facts to throw at you, and then a food analogy, which I feel like we've got to include because food is my favorite topic in investing. So what is the European Union? It's 27, actually 28 member states that all kind of get together and form a coalition of economies. Great Britain is considering leaving that union for a couple reasons. Number one, they can save $12 billion in annual fees just to be a member. So imagine your local fitness club, whatever that is. If you're not actually working out that much, it's a quick way to save some money. Don't go, cancel your membership, save that money. They're basically saying, hey, this gym membership might not be worth it. I might need to leave. Why might it not be worth it? Well, for one, they would like to see less regulation. If you've ever been a member of any kind of association or board, you know exactly what this looks like. Imagine your local homeowners association. Imagine a corporate board that you may have involvement in. Maybe it's something at your church or your school, something like that. When everyone comes to the table with self-motivated interests, rules begin to pop up because everyone wants to protect themselves. Right now, Britain is saying, you know what, maybe it'd be best if we went out on our own. No offense to you guys, but we'll look out for ourselves because nobody cares about number one quite like number one. That's what they're thinking. One of the big areas where they think less regulation could be important is specifically immigration. Currently, the European Union basically recognizes citizenship and the right to work across all member states. So if you're a member or citizen of one, you can go to the other pretty easily, relocate, get a job there. So those are some of the areas in interest in terms of why they might want to exit that. The challenge there becomes if they do exit, now all of a sudden they've got to reach trade agreements and kind of establish new regulations and new infrastructure with all of these member states. And that can be really difficult because we're talking about 27 of them. If they do vote to exit, there's going to be a 2-year period in which they can kind of work all these things out. But that's going to be, let's put it mildly, absolute chaos. Doesn't mean it's going to be bad when it all finishes up, but it's going to be kind of nuts. So let's jump to a food illustration here and talk about a European food that's probably not authentic at all and is certainly not British by nature, but let's talk about pizza. Yep, pizza, folks. Right now we're talking about the European Union, which is the entire pizza pie as a whole. Britain is the pepperoni. And right now Britain's saying, you know what? We get a lot of use out of this pizza, but we might like less regulation. We might like to be spread in whatever methodology we want. We don't necessarily have to go with cheese and with bread and with pizza sauce and with Parmesan. I don't really even like anchovies. Maybe they want to do their own thing, and maybe they decide, you know what, I don't want this regulation telling me how often I get delivered and how quickly and things like that. I don't want to be put in a box that's cardboard anymore. I want to go out on my own. Who knows what the potential of pepperoni is if it's not confined to pizza? That's kind of the stance of Great Britain right now. At least that's the option they're weighing. Of note, kind of like U.S. elections a lot of times, there's pretty equal weighting in terms of who's for it and who's against it. But unlike U.S. elections, there's a huge middle ground that is undecided. Recent polls have said that about 12% of the voting population is not sure as to how they're going to vote. So maybe they'll vote for the Brexit and the leaving of the European Union. Maybe they'll vote to stay, but 12% is a huge, huge portion of that population to be undecided. We'll keep an eye on that. In the meantime, folks, Bond Week coming up June 27th. We're going to hit on bonds every single day of that week. So make sure you're subscribed, make sure you're tuned in. You're going to love that week of content. And if you have any questions about bonds or fixed income in general, shoot us an email, theinvestingpodcast@gmail.com. We will talk to you guys soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.